MAG has this great land package which they found through their drilling program, bonanza grade silver, and they've only explored about 5% of their project, but they have this really great project which has like a 44% internal rate of return on it, very low cost silver. It looks like a really great project, and they're going to be developing the mine this year. They're supposed to start producing sometime in the second half of 2020. So they're in that sweet spot that we often talk about, that you want to be in the miners, where you purchase the miner before they go to production, where they have a really great deposit. Because once they go to production, a lot of industrial investors move in, big money moves in, and they start bidding up the price of the stock.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are looking at a silver miner today, MAG Silver, with my good friend Rob Kientz of goldsilverpros.com, who joined us the other day talking about palladium and some of the things going on in the precious metals markets, why there's a lot of reason to believe that we will see higher metals prices. And certainly, while we are not giving licensed financial advice today, Rob does dig into a lot of the miners, which can offer leverage on some of these commodities. So with that said, Rob, great to have you back on here today. And how are you, my friend?
I'm doing very well. Thank you, Chris, for having me on.
Well, it's a pleasure as always. I love the interviews and the knowledge you share. And I know you just put out a report recently on MAG Silver, who I actually caught up with at the Vancouver Resource Investment Conference. I've been hearing a lot of good things about them, and fortunately you're one of my mining experts and kind enough to dig in a little deeper. And that said, what have you been seeing in the MAG Silver?
So MAG Silver is in a joint venture with Fresnillo, who's the world's largest primary silver miner in Mexico. And they're mining silver in one of the most historic, prolific producing silver regions of the world in history. And MAG has this great land package which they found through their drilling program, bonanza grade silver, and they've only explored about 5% of their project, but they have this really great project which has like a 44% internal rate of return on it, very low cost silver. There are a lot of byproduct credits that they get from other metals, like gold and some others. It looks like a really great project, and Fresnillo is probably one of the lowest cost operators, not only in Mexico, but in the world. So they're going to be running the project, and MAG is sort of the exploration company. And they're before production of the mine. They're going to be developing the mine this year. They're supposed to start producing sometime in the second half of 2020. So they're in that sweet spot that we often talk about, that you want to be in the miners, where you purchase the miner before they go to production, where they have a really great deposit. Because once they go to production, a lot of industrial investors move in, big money moves in, and they start bidding up the price of the stock, close to what the project would be valued at for their metal in the ground. And the one thing about MAG Silver that's a little bit different in that scenario is that they're already owned, 89% of their shares are owned by institutions or large investors already. So they've had the eye of these large investors for a long time. And it has a lot to do with the district they're in, with the JV with Fresnillo, and the respect that people have for MAG's management team there. So the thing about that project is it has tons of silver, a lot of gold, lead, zinc, and copper. The silver in this district tends to be across the top. So you get to the silver first, then as you go down into that formation, you start to get a little bit more gold, lead, zinc, and copper. So they have a really great economic assessment that's out there, in which it's really low cost of mining silver. I think the cost of mining silver might be a little bit higher in the first couple of years, because you're going to get to that silver first, and they're not going to have as many byproduct credits from the other metals up front. But as they get down into the lower depths and start getting some of that gold, lead, zinc, and copper, the price of their mining silver is going to come down quite a bit. It's going to be very, very economic. It's probably going to be more economic than any other primary silver producer you see in the world. It's going to be a better or lower cost of mining silver than you're going to have in these other silver miners like Pan American, like First Majestic, like Fresnillo itself. And one of the reasons Fresnillo really want to do this joint venture is because they've mined a lot of their silver in this district, and they're having to go explore for more, but they don't have ready deposits. So that's why they did the JV with MAG. Great company. I think it's a great time to invest. They've issued about 86 million shares. They have no debt, and they have about 100 million in cash. So they're very well financially positioned. Don't see any reason why they wouldn't be able to perform and build the mine and for their investors. And I think there's just going to be a lot of demand for silver in the future. And I think that they're going to be very, very profitable. I don't expect the price of silver to stay at $18 for long. So if they're mining silver, $6, $7, $8 an ounce, and they're probably going to, by the time they start mining the back half of this year, I expect silver to be right around that $20 mark. Maybe it climbs up to $25, $30 as we get deeper into the world financial crisis, which I think we will. So I think they're going to be very, very highly profitable. I think it's going to be a great project.
Right. And Rob, could you talk a little bit about, I think a lot of people hear that you can get leverage on some of the miners relative to the bullion price, but maybe even walk through a quick example and explain how that works and why even the move last year from 14.5 to 18, almost got above 19 at one point, but really made a big impact for a lot of these companies.
Yeah, when you're talking about a miner, they have a lot of these fixed costs, a lot of OPEX and CAPEX that goes into their projects. And all this money comes in, a lot of the CAPEX, especially building the mine, comes in up front. So the share prices of these miners tend to be very low because they have all these CAPEX costs before they hit production. And their profitability all depends on the difference in price between the market price of their product, in this case, silver and gold and the other base metals, versus what they can mine it at, what their costs are to get it out of the ground. And let's say it takes $10 to mine an ounce of silver and you're selling for $15. You're getting $5 an ounce profit that you can use to apply towards future drilling, future development, but also goes straight to the bottom line. For every dollar you go above that, above your cost of mining, it's actually pure profit. It's above the CAPEX and OPEX you have to spend to continue operations as a company. Now, a lot of times companies, let's say it's $10 in the previous example, and the market is $11 for an ounce of silver. They have that $1 an ounce to really allocate between, do we want to go explore more? Do we want to upgrade our plant and equipment and get better efficiency? Or do we want to put that, to the bottom line and take it as profit, which is good for investors. But once you go $2 and $3 and $4 and $5 and $6 above your cost to mine, that all goes to the bottom line and it raises the income of that company. And what that does is it multiplies the value of the stock almost exponentially because it's all like free money. It's almost like Apple saying it costs us $800 to produce an iPhone and we're going to sell it for $1,500. And that $700 an iPhone goes straight to the bottom line of the company. That's why you see the price of Apple go up so high, because you're realizing more net income. Same thing with the precious metals miners. Once they get above that cost an ounce, every dollar per ounce of that they can sell their product for above that goes straight to the bottom line. And you'll see that stock would begin to creep up. Basically what it means, the net present value of that project keeps going up, and the net present value is how you value metal miners up against the capitalization of the stock. So if the net present value of a project is $1 billion and the stock capitalization is only $700 million, and you've got $300 million of profit there, and that will and the stock will tend to meet what the net present value of that project is. There's a lot of sort of accounting and math that goes into that, but just know that every dollar an ounce above the cost of mining that metal that you can sell it at market for, the more money on the bottom line, the higher that stock price is going to go, and you'll get leverage to that. Versus if you have just an ounce of silver and the price goes from $18 an ounce to $19 an ounce, you made $1, but the stock price of that company will go up more than that incrementally.
And so in your example, let's say we had $15 silver, $10 cost of production. Silver goes from 15 to 20. We're looking at a 33% return on silver, whereas the profit margin doubles.
Yeah, profit margin doubles. That all goes to the bottom line. That goes to the investor value of the stock. And particularly the mining stocks, it does that for every ounce of silver in the ground for the entire project, not just the production they have today. So that entire stock, that entire value of that stock, of the resource in the ground gets revalued, not just their sales. So unlike the Apple iPhone example I used, it would be like you would be valuing Apple at all the iPhones they're going to sell possibly in the next 10 years in the future, all at the same time.
And to reiterate what you said earlier, we're not talking about an explorer going out looking, maybe they get good drill results, they find it. I mean, we're talking about a company that has, I believe it's are they the largest, if you look in terms of deposits they've identified, we're talking about a company that has identified they already have the silver. Now they're just bringing it out of the ground.
Yeah, to bring it out of the ground, there will be in the second half of this year, and they're going to be one of the largest silver producers in the world. Now, this will vault them into one of the top tier producers of silver in the world, which is really exciting. And again, they've only explored 5% of their district, or their land package in a district which has been one of the most prolific silver producing districts in the world. So looking at the geological characteristics of this district, we expect them to find much more. And that's really, I think, the longer term value in MAG. Their share price has already been bid up a little bit by all the institutional investors who got in very early because they know how good this district is. But I think the long term value is the discovery potential, what they're going to find in this district in year 2 and year 5 and year 10. I think this mine could be going for a very long time. And again, the more resources they find, the much higher that drives up the stock price. And it's a leveraged. So if you find another 10 million ounces of silver, it's a leveraged bet on all those 10 million ounces of silver. You'll see their stock price rise over time.
Yep. And you mentioned the sweet spot of right as they're getting into production. I think you actually talked about that last time as well. Could you dig into that a little bit more? Because I thought that was a really good point for people to be aware of.
So there's an investment curve that Brent Cook and a lot of other mining experts had put out that you can find online. It's basically like a modified S curve. So the life cycle of every company is, a beginning company, mid-range company, mature company, and you have sort of an inverted S curve for the expected stock price of that company. Well, for a metals miner, it does the same thing, but it's influenced by your exploration find, when you go to development, and when you start producing. When you're a miner and you found a big deposit, that's the potential of the stock, but you're not realizing that potential in income, and so the price of the stock tends to stay depressed. Not only that, but you're spending maybe $100, $200 million to develop that mine. So you got more money going out than you have coming in. So you may have some share dilution. Some companies may actually take on some debt in order to do that. So the price of that stock, when you're share diluting and you're taking on a little bit of debt, but you're not producing income, is going to be depressed. But when you have a big deposit and it's right before you go to build that mine, that's when the difference between the share price of the market will realize, but the potential value of that stock is at one of its greatest levels. So then flip the switch, you built your mine, and now you start producing, right? Well, now people are going to see your production results. They're going to see that you can pull it out of the ground, that you're doing it profitably. They're going to see how much money you're making. Now they're going to go back to that deposit that you have, and they're going to revalue it through an accounting procedure. They're looking to look at the net present value of all of that metal that you have in the ground. And they're going to discount it for how many years that you think that you're going to be mining it. And if you're in a safe spot, it's only, you could discount maybe 5% a year. And then you can calculate the number of what that deposit is going to be worth. And then that, it basically equates up to the market capitalization of the stock. So let's say you have 100 million shares, you have $1 billion project, you've got $10 a share basically for your share price. Now, if they make a discovery and they're in production, and this is where you can make a lot of money as well. Let's say they discover another 100 million ounces. Well, you just boosted the price of that stock, and they didn't actually produce anything. They haven't come out with an innovative new product. They've just found new resource. And I think that's sort of the value of MAG, is it's like a double bonus. You're getting that miner that hasn't produced yet, but has this really great deposit, but they've got 95% of their land package yet to explore in a very prolific producing in past history district, where you could really see them accumulating additional reserves in year 2, 3, 4, 5, 6, and 7 as they expand that drilling program. And we really don't know what the price is going to be, but I imagine that they're going to do very well over the next 5 to 10 years. And it's not just going to be over their existing resource they have in the ground. It's going to be through additional reserves that they find.
Yeah, and then if you pile on a rising silver price on top of that for the reasons you discussed before, it can be good times, which perhaps leads to the last question. What's the best thing that could happen to MAG, and what is the risk? What might be keeping them up at night?
I would say there's a little bit of jurisdictional risk. Mexico's moving to a little bit more socialist government model, and historically, when that's happened, they've tended to tax the miners a little bit more or make it a little bit harder for them to get their permits and things. I think MAG's in pretty good position because they're dealing with Fresnillo, who has a history of getting permits and moving projects forward. So I don't see that as a really existential threat for them, but it could be a threat in terms of taxes on their production down the road. That may be the only one that I see. I'm not really worried about their deposit or their management, or especially the operations of the company. And I think their upside is tremendously high. I mean, they're mining silver. It's one of the most undervalued physical tangible assets in the world. Is the most undervalued precious metal in the world. They've got a ton of it. I think they can find a lot more of it. So I don't see a whole lot of downside risk to this one. One thing I would say, their PEA, which is their economic assessment, was done in 2017. By the time they mine, that'll be 3 years old. So their cost assumptions are going to be a little bit on the low side. I would urge investors to maybe, add 10% or so to those numbers just to give yourself a little cushion. And I would also expect that because the silver is on the top of this formation, they're going to get more silver than base metals up front, that their overall cost of mining per ounce is going to be a tad higher up front than what they have in their economic assessment, but that over time, it'll come down a little bit as they get into these other metals. And so you begin to see the value of that investment. So I would say probably year 2 is where you're really going to see the value of MAG shine through, as they've had a little bit of production. They're starting to get it maybe in some of those other metals. They've, taken care of their production problems. The market has confidence in them. And I think that's where you're going to see their share price really rise.
Well, Rob, I sure appreciate you sharing that. Your analysis and research really comes through the way you speak. And perhaps just in wrapping up, you can let folks know where they can find you. We'll also post that link to the report you just wrote on them. But again, if you could just share the website one more time.
Sure. You can find me at www.goldsilverpros.com. If you want to subscribe to my newsletter, it's free. It comes out quarterly. You go to the upper right-hand corner, click on the newsletter button, and just give your email address. Nothing else is required. No subscription is required. And you can email me at robert@goldsilverpros.com. I do answer all emails.
Well, Rob, I sure appreciate that, especially with so much advice going around from Wall Street and other places that hard to take seriously or trust. Providing really a great source of information at this particular time, I think, is a great service to people. Appreciate you joining me on the show, and we'll look forward to catching up again soon.
Yeah, I look forward to it. Thank you, Chris.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.